Hi fellow traders, I'm making this video to share my Euro USD trading plan with you. So I'm starting with daily time frame where we can see that we have recently seen a price development in Euro USD contrary to previous price movement. So previously price has been moving from here to here in a fashion of making lower lows and lower highs, and that was a clear downtrend which has now been invalidated because market has made a new fashion of movement. So this uh, uh, previous downtrend was already invalidated right after market went above this high. I'm talking about this swing high, so I will simply insert a shape to make it more obvious. This is the swing high I'm talking about here. So market once crossed this, and this is exactly where the previous downtrend was invalidated. However, we didn't have enough uh, price action and a bullish price action to justify any bullish development, and we didn't have any economic data either. However, market was gradually going to the upside. Movement to the downside was faster, suggesting continuation to the downside. However, market didn't continue to the downside and didn't make a new low, and market developed further in a fashion of making higher highs, low, then higher low, higher highs, then higher highs. So now this is a uptrending fashion, and let's talk about what we can expect further. So if we just look at the movement of last week, we have these three candles, and these is just not the price action, normal price action. These are supported by the FOMC policy statement, Fed interest rate decision on Wednesday, and that gave us a hanging man or doji kind of pattern, which suggested at least pause in downward move, and then we wanted to see what happens next. Then Thursday was bullish price development, and then Friday bullish price action made an engulfing candle, and it was supported by poor non-farm payroll and other related data like average hourly earning and employment rate. So overall picture of if you combine all this data released on Friday from the US, the or overall result was bearish for US dollar. So this bullish development is supported by fundamental factors and significant fundamental factors, because non-farm payroll is known as grandfather of all the economic uh, releases. And then market was expected to move to the downside and then continue to the upside, because we do not have any influencing factor from European Union or US this week. So we can simply rely that the market would continue in this fashion, because it has already continued for many weeks, and now we have supportive economic data, and also we have RSI trading above 50, which is showing enough strength to the bullish side. But what can be the downward retracement? If we look at the downward retracement, this was the previous downward retracement, then another downward retracement was slightly bigger, then a downward swing was exactly the same. So this one and this one are exactly the same, and we see harmony in price action more than 50% of times. So we can anticipate that the market can fall to this level, and then we can take an entry from here, and we can target this area, which is the nearest resistance, which earlier was a support, because you can see these swing lows here, and now this area has become resistance. But what is my plan? I'm going to take a position right now, and I'll add another position here, and definitely my stop loss is going to be below this low, which is something around 516 area. So I will wait for closing of the candle below this to take the loss, rather than setting a stop loss, to be on safer side, not to be stopped out because of any temporary price action. Alright, because you can see what happened here. My market went down slightly below this low just by 5 pips. So if somebody placed a stop loss exactly below this, could have been stopped out, and then market continued to the upside since Wednesday. That's why it's rather better to wait for daily candle closure if you are trading on daily time frame or any similar higher time frame. Now let's go to 4-hour time frame to understand why I'm suggesting to take a buy position right now and then wait for what happens. So if I'll take a buy position now, I'll at least gain these approximately 130 pips. or if market goes down, then I'll have another position. My average of these two positions will come something around here, so my total risk will be 138 pips and reward will be 175 pips. So I will not be in a bad position despite having two positions. Alright, why I'm taking buy position now is supported by bullish price action, which can be understood in terms of candle pattern. For example, this is clearly looking like an engulfing candle. Even though this has not closed, there is still 54 minutes remaining in closure of this candle, but I guess this is going to close as a bullish engulfing candle, and this is bigger than previous bullish action, which failed to continue price to the upside. This was also engulfing candle, but market fell down to 38.2 Fibonacci retracement level. Fibonacci retracement level is not important here. What important here is price action, because we already have a bullish bias on daily time frame supported by the economic factor of the previous week, and also supported by a long-term strength established by this RSI, which was trading like this below 50 level when price was making this kind of development, and then it is now clearly above 50. So I was looking for the buy trading opportunity, and this price action was not supported. This was bullish price action if you just look at the candle, but what I say always is not to depend on one single factor, whether it's technical or economic. So we have economic factor, we have technical factor on daily time frame, but we do not have sufficient economic, we didn't have sufficient price action, I mean sufficient technical factor here to take position buy here. Because if we look at the histogram, moving average convergence divergence has been seen to be working really good on 4-hour time frame on Euro USD, based on my experience of more than 12 years trading Euro USD. So what I see, histograms really work here on 4-hour time frame. So I usually use histograms on 4-hour time frame. So it has been making lower histograms. You can see all the histograms has been made lower than the previous histogram. So this, despite this bullish price action, which was here, and it was a significant time frame. 4-hour candle is significant, especially when it has been made in European session, because we are trading euro. So whatever happens in European session is definitely a result of price action of active traders of that session, and that can not be temporary if the price action sustained for 4 hours. However, if you look at the histogram was not bigger in the size, or bigger in size comparatively, it was smaller than previous. So every histogram from here was smaller than previous histogram, which was simply suggesting still weaker price action. So that's why it was not suggested to take buy position here, despite there was a bullish engulfing candle. Today I see this bullish price action. I took my position because this histogram is bigger than the previous one. So this is rather better situation to take a buy position. I'm not saying that there is any kind of 100% guarantee that price will never come down from here, and it will. This is exactly where price will this is exactly where price has already started moving up, and it will go to this final resistance. There is no such thing in the market. There is no guarantee in the market. There is no guarantee in the finance. There is risk management, and there is reward. So I have already told you about my risk management, about my second plan, that if market falls down, I'll take the second position, and what is my and where I'm going to exit in case of loss. I've already told you. So I have a risk management plan. I have the reward on the table, risk on the table, but the reason behind taking buy position was this, because we have a big histogram. So that's all in this video. Thank you for watching.